Hello everyone. If you're finding that health insurance in 2026 is just completely unaffordable, you're not imagining it. Americans are seeing skyrocketing monthly premiums, which is leading to many just dropping their coverage entirely. So what are your options? Well, in today's video, we're going to explain what's happening, what's driving those premium increases, as well as how those premium tax credits work with your MAGI or modified adjusted income, and how you can lower your MAGI to get more tax credits, as well as alternatives that may be the only option that you have if marketplace plans have become just too expensive. So let's get right to it. Now, since 2021, most Americans have benefited from the enhanced premium tax credits, which were made available under the American Rescue Plan Act and Inflation Reduction Act. Unfortunately, these enhanced premium tax credits are set to expire at the end of 2025. That means in 2026, increasing monthly premiums. Without these enhanced credits, the federal government will revert to the pre-enhancement ACA subsidy structure, which is much less generous and covers fewer people. Experts estimate that premiums net of subsidies could more than double for many enrollees in 2026 compared with 2025. And that isn't just theory. Early data show ACA enrollment declining as projected subsidies last. At least one analysis has suggested that millions could lose coverage or become insured if the costs rise too high. And if you're here watching this video, that probably means that this is affecting you. So let's talk about these ACA subsidies and how they work, as well as the return of that premium subsidy cliff. So under the ACA, which is the Affordable Care Act, marketplace plans, which are sometimes referred to as Obamacare, many are eligible for a premium tax credit. This is determined by your income and your household size. If your income falls within a certain threshold, then you would be eligible for a premium tax credit. This is just a tax credit paid up front, reflected in a largely discounted monthly premium. Now, this type of tax credit is only available to those who enroll in a marketplace plan. Now, your household size is pretty easy to understand. And then there's your MAGI, Modified Adjusted Gross Income. This is your taxable income after certain deductions are taken into effect. Now, if you have a larger MAGI, then you'll probably be eligible for a much smaller premium tax credit. If you have a lower MAGI, you'll probably be eligible for a much larger premium tax credit. But this is all affected by that premium subsidy cliff. Before the enhanced credits, your premium tax eligibility would be determined entirely by your position in relation to the FPL. If you made more than 400% of the FPL, which is federal poverty level, you would not be eligible for a premium tax credit. That's the cliff, because if you make more than 400%, you fall right off of it. And unfortunately, many middle-income households make just a little too much to qualify. And if you do make just a little too much to qualify, then there are ways that you can lower your MAGI. First, you may want to speak to some type of tax professional to see if there's any additional deductions that you may be eligible for. You may also want to look into an HSA, which is a health savings account. Now, there's new rules with regards to HSAs in 2026. All bronze and catastrophic plans will now be HSA eligible, regardless of how high their deductible actually is. Contributing to an HSA offers a triple tax advantage. Contributing to an HSA lowers your taxable income because the contributions that you make are pre-tax. Therefore, you could actually lower your MAGI to make yourself eligible for a much larger premium tax credit. Remember that every year the IRS sets maximum contributions for HSAs. And in 2026, the maximum contribution for an individual with an individual plan is $4,400. And for someone with a family plan, it's $8,750. And then there's also that extra $1,000 catch-up contribution allowed for those 55 and older. That means that depending upon your age and the type of plan that you're enrolled in, you could possibly lower your MAGI by almost $10,000. That is huge with regards to your eligibility for a premium tax credit. That could push you over the threshold to make you eligible for a much larger premium tax credit, or if you're someone who was ineligible before, that might push you over to the threshold to at least make you eligible for some type of premium tax credit. This could save you quite literally thousands and thousands of dollars per year. And of course, there are other benefits to HSAs as well. Remember, these are accounts with your money in them, and the accounts themselves are interest bearing, and that money rolls over from year to year, and that interest is of course not taxed. You can use the funds in your HSA for a qualified medical expense, and the list is truly quite extensive. Or as I said, you can just leave it there and let it roll over. You can even invest a certain portion of your HSA, and the earnings on those investments are not taxed. Now, if you hang on to that HSA until you turn 65, you can convert it to a basic retirement account without any type of penalty. Now, I will say that even though the bronze level plans and catastrophic coverage plans are supposed to be HSA eligible in 2026, it's not that clear on the marketplace when you're actually perusing different plans. So if you do need our assistance, you can reach us in the comments below or at the number on the screen. We're licensed health insurance brokers. We're licensed nationwide, and there's absolutely no charge for our services. And we release these videos on a weekly basis, so please make sure to subscribe to stay up to date. There have been so many changes with health insurance and marketplace plans. And of course, make sure to like this video so we can get this information out there. All right, let's get back to it. Now, if despite all of that, health insurance on the marketplace is just too darn expensive this year, then you do have alternatives. For example, you may want to look into a short-term medical plan. This is a type of private insurance that is currently being offered in most states for a period of up to 3 years, so actually not so short term. Now, short-term medical plans can be a great way to save money if you are ineligible for a premium tax credit, especially if you are younger and healthier, because short-term medical plans do require medical underwriting. That means that there can be significant cost savings for those that are younger and healthier. However, if you do have more extensive medical needs or pre-existing conditions, remember that those more basic pre-existing conditions won't be covered in the very first year, although they may be covered in the later years of a multi-year plan. However, if it's something more extensive, then it's possible it may not be covered at all. So short-term medical plans aren't ideal for all people. If you're someone with more extensive medical needs, if you are looking to start a family, or if you are someone with young children, then they're probably not the best for you. However, if you are someone who wishes to travel frequently, then a short-term medical plan could be a great option because they do offer nationwide PPO coverage, and they will allow you to more customize your approach to health insurance because you can more so pick and choose your benefits because of the myriad options available to you. There are also catastrophic coverage plans. These are more bare bones plans that will have lower monthly premiums because they're really just there to protect you should the worst happen, because they will impose that out-of-pocket maximum. So if you have major medical needs, you'll still have some type of protection in place. If you choose to enroll in a marketplace plan, catastrophic coverage plan, then you'll still have access to your PCP for 3 visits before having to meet that very, very high deductible. But again, they can be a great way to save money because they will offer much lower monthly premiums. However, if you have more extensive medical needs, then you may have to pay more extensive medical bills. Now, a catastrophic coverage plan can be a great option if your doctor offers something known as DPC, which is direct primary care. This is not insurance, so it's not really something we can help you enroll in, but it's an agreement between you and your doctor, which will provide you with more direct access to your doctor for more basic services, possibly lab work. It just depends upon your doctor and what they are willing to offer. So that's something you can look into as well. And then there are lump sum payout plans. These would be things like critical illness plans or hospital indemnity plans. They work in similar fashions, although under different circumstances. Basically, a critical illness plan is a lump sum payout plan that will pay you out a lump sum determined by the terms of your plan if you are diagnosed with one of several critical illnesses after enrolling in your plan. Now, a hospital indemnity plan works very similarly. If you are hospitalized, based on the terms of your plan, then you would receive a lump sum payout. These monies can be used for basically whatever you want. You can use them for your hospital bills, but you could also use them to pay your mortgage or for groceries, however you see fit. I would just caution you away from health sharing ministries. They are unregulated and we've heard way too many horror stories. If you do want to learn more, I will put a video that goes more in depth over here, and I'll put our All About Marketplace playlist as well. If you have questions, you can reach us in the comments below or at the number on the screen. We're licensed health insurance brokers, we're licensed nationwide, and there's absolutely no charge for our services. Of course, as I mentioned earlier, there have been so many changes with health insurance, so please make sure to subscribe to stay up to date, and make sure to like this video so we can get this information out there. As always, thank you so much for watching and have a wonderful day. Bye-bye.